Hi everyone. So this is Finance Meets Real Estate. We meet here every Tuesday, weekly. We have many amazing guests, like our guest here today. And so, we had over 100 guests on this channel so far. Make sure to follow us on YouTube as well. I put on the chat the link for that. So today we're going to talk about building a community and mentorship. So as you guys know, real estate is pretty much a relationship business to a big extent. So building a community is extremely important. So Alex Wavli is our guest today. So he's a managing partner of 900 units, and he also has invested as a limited partner in about 3,000 units. He has experience in like various real estate aspects, such as commercial build-outs, leasing, new construction, renovations, flips, Airbnbs, and multifamily. He's never lost money on a deal, and he's always actively looking to expand his portfolio. So he's going to talk about teaching and mentoring towards financial freedom. He runs a weekly mastermind for 3 years already, and so he's going to talk about that as well. So with that, I'm going to pass it on to Alex, and if you guys have any questions, feel free to interact or put your question on the chat and I will relate.
Yeah, cool. Thank you, brother, for having me on this call. And it's an honor to be here and to share, some of my experience and some of the things that that I really stand for. So, first I just want to thank you for having me here. I guess we'll start off by, I think first, life is a team game, and real estate is no different. And I say this, like, if you look at your life, your family is a team, your spouse is a team, your children, like, it's all a part of a team to make something work, right? So if we start seeing real estate in that way as well too, or even in business as well, if you build a team, there's really nothing that you can't accomplish. One of my mentors, Grant Cardone, always says, like, who's got my money? And when he says who's got my money, it's not just about who's got the actual money, but who's got resources, who's got time, who's got experience, and who's got the money. If you have a really great business idea or even a real estate deal, like we buy apartments and we buy storage units, the deal comes first, right? The deal comes, and even if it's something that you can't afford yourself, you can look at who's got the money, who's got the ability to do that, who doesn't have the time, who doesn't have the experience, but got the money. And then you look at who's got the experience. They may not have the money at the time, and they may not even have the time right now, but they can give you experience. There's expertise in there. And then there are the people that may not have the money or the experience, but they got the time. So you put these three pieces together, you can really make anything happen. Right. And sometimes when I talk to people and they're like, hey, I got this really amazing idea, or I got this property, and they don't know what to do to take the next step. And when I tell people, how do you build your business or how do you do your real estate, think about who are those three components that you have to put into place. If you can do any of those three things and you had to put three pieces in place, give them each 30%, and you take 10%, it's really, there's really nothing that you can't achieve. Right. So that I want to put out there first. If you have a team, there is nothing that you cannot achieve as long as you get the right people in place, right? Who's got the resources. So that's kind of how I'll start. And and it will lead into why I believe building a community or even being a part of a community will really accelerate you in compressing time, because we are here just for a limited amount of time. And we want to always push to compress the time. If somebody took 20 years to accomplish something, and they're willing to leave you clues and you have to pay for the clues, well, pay for it so that you can compress the time. That's another topic that I talk about a lot, is trading, how people trade time for money. And we're moving in a direction to, how do we buy our time back? How do we trade money for time? Because ultimately time is the most important resource that we, each person, have. Right. So I kind of want to start there. And if you want to go anywhere with it, just let me know.
No, absolutely. That makes a lot of sense. And so, but where would you say, Alex, from your perspective, like, how do masterminds fit into that in terms of versus other networking, like general real estate networking, or whichever, like courses, taking different courses, etc. Like,
Yeah,
what is
so
the
I think
place of masterminds in that?
I think taking
I think it would change 3 times.
oh yeah, I think taking courses is one aspect of compressing time, but usually inside a mastermind, there is somebody that is leading this mastermind that has been to a place that you want to go. Right. So the mastermind itself not only gives you access and proximity to that person and shortens your time in that way, but when you have a group of people coming together with this very similar vision or something they want to accomplish, it makes your ability to see what's possible quicker. Right. So maybe you go into a mastermind and you're like, man, what, I can't afford this property, or maybe I can only buy a $300,000 property. But inside a mastermind, you start to see everybody else's contributions. Oh, this person can come up with money. This person's got time. Now you're looking at $2 million deals. You're looking at $5 million deals. You're looking at $10 million deals. That expands your mind on one aspect of what's possible. And the other is compressing the time in which it takes to get you there. So I believe anything that can take you, that can give you that compression of time, is something worth spending money on. Courses also do the same, but courses really is just something that you're doing on your own as well. All right. So that's why I think community and masterminds is so important. And the other philosophy behind it that I really believe is that every person is longing to belong. You know, we're always looking to fit in somewhere, get respect. We want love, we want respect, we want to be acknowledged, right? I mean, I think these are things that communities also help you see for yourself, you know, as opposed to when you're just out there by yourself and you're kind of having these internal dialogues solo, right? Having that community and that mastermind of people supporting you and getting across there too. Because yeah, we can do real estate, we can invest, and we can do all the things that money can buy us. And it isn't about that. It's about what those things mean for us that we get to face on a daily basis. Like if we look at what money can get for us, it's really that sense of like security and the perceived freedom that we would get from the money, right? And then we have to face, okay, what is the fear, or what am I afraid of going after that? You know, and our world has kind of programmed us to be afraid. We basically make individual accomplishments like king in our society, right? Like we always highlight people's individual achievements. And more, I think people are starting to understand that inside a team environment, that's how really big things are done. And a lot of times when you look at successful sports teams, you know, you can look at how each individual plays such a crucial role for them to win the championship or even create a dynasty, three-peat, things like that. You can look at, you know, the Chicago Bulls when Michael Jordan was there. Yes, individual accomplishment was huge, but the people that played a role, the supporting cast that made it all possible. Right? I think that's really important for us to also identify, to know, like, why are we even in a community? Why is team so important for us? And that's why I really love, you know, in our society, like people do fit in some teams in some community, which is, you know, off the top of my head, like sports, art, you know, concerts, following certain people, following certain teams, churches. These are communities that people feel a sense of belonging when they're there. And it gives you the confidence to take on something else. So it's a deeper conversation than just real estate, but it's that, what my mentor would call like the dragon that you have to face, like to step up, to do those things, to say yes to those things, because we've been trained not to do that. Right. So yeah. So that is I don't know if I answered your question or if I just went around and tangent off on something else.
Absolutely. That makes a lot of sense. But in terms of, would you say, you know, if I might add that, you know, mastermind, besides like all the things that you mentioned, as far as, you know, like, okay, providing you with a person, basically the person that you want to become kind of in the future, right? In a way that you're trying to, at least in the shorter run or intermediate run, kind of, you know, if you will, emulate or can learn from and so forth, or providing kind of like this mentor and like peer in a way, like this bit forward from you that you want to kind of pursue. But besides that, is it something where you could say that masterminds are perhaps more actionable and deal-oriented, where, okay, now you can literally partner with those people, deals? Is that an aspect that you would say is, perhaps the most important or very important, or where would you rank it in?
Yeah, I mean,
that
I think
perspective?
that is extremely important because again, that comes back to when you have a team of people that you can see that can help you achieve a greater goal that you couldn't do on your own. That's going to give you the confidence to do so. And if you're inside a mastermind, somebody's giving you literally the roadmap on how to get there. And I'll use my own personal example. I went alone for a long time. I thought I had to buy real estate deals on my own. And I'll save a certain amount of money. I'll say, okay, now I can afford to buy this duplex, or now I can afford to buy this single family. And after I joined a multifamily mastermind, I went from 12 units to 900 units. Like it took me 10 years or 12 years to get to 12, and then it took me 1 year to get to 900. Right. And I think one of the mindset that we have to overcome for majority of us, and this speaks into individual and team mindset, is, do I want 100% of $1 million, or do I want 1% of $100 million? Right? If you think about a deal that you're in, what opportunities, what resources, how much value would you learn by being a part of a $100 million deal versus I'm solo and I take down a $1 million deal? See, the value of money is the same, but the returns on your learning and your knowledge and who you had to be to get there is miles apart. That makes sense. So being inside a community, being inside a mastermind, definitely 100% accelerated me exponentially.
Mm-hmm. Yeah, I mean, you're making a very, very interesting point, because to your point, it can be the exact same equity you're really in, or even the returns that they're allocated to you within those smaller deals and those bigger deals, but it's really a different career advancements, if you will, and a different education and so forth. So how do you want to talk a little bit about how you got started? So I know you mentioned like you had perhaps like almost a decade of investing to reach to 12 units, right? So how did that go? And like then you got into a mastermind and so forth, like a little bit about yourself, let's say, in that regard.
Yeah, cool, man. I mean, I'll share a little bit about my story too. You know, some people here definitely have heard my story before, and the people that are around me heard my story. And it started in college when I was 19 years old or 18 years old, somewhere around that time, when I picked up the Purple Bible, Rich Dad Poor Dad. Most people in real estate and have read that book, right? It's like one of the pivotal turning points of their lives in terms of, oh my God, there's a different possibility. So I think that book is revolutionary. If you haven't read Rich Dad Poor Dad, like definitely read that book by Robert Kiyosaki. I read that book and it inspired me so much at that point. I had $10,000. That's all I had. I mean, I was 19 years old. So 10,000 was, everything I had. I joined the personal coaching program that they had. And it took me about 3 years. Actually, it took me about like 16 months or so to finish the program, which I had created a roadmap for financial freedom out of the rat race. I didn't have a mentor. I didn't have a mastermind. Back in those days, YouTube wasn't really big. There was nobody to guide me on what to do next. So I got this information. I got this map, and I didn't know what really to do with it. So it took me about 5 more years, almost 6 years after I finished that, to buy my first property. I finally had enough confidence to purchase a triplex. And that triplex paid for itself, paid for my car, paid for my cell phone. And I'm like, dude, I just completed this roadmap right here. Financial freedom. My passive income exceeds my expenses. But, I was young still at the time. I didn't know what else I could do. I'm like, yeah, I'm out of the rat race. And then because I didn't have anybody teaching me, I took that money, I refinanced out of that house, and I opened up 2 restaurants.
Hold on, like, so you're saying the first triplex at that time, and being young, or I guess you were like 25 or something at that point, right?
I was 26 when that happened. Yeah.
26. Okay, well, so at that point, that triplex was actually sufficient, or
Yeah.
was
So
sufficient to cover your.
it generated enough income. I lived in one, rented out two. It generated income to pay for its own mortgage. It generated income to pay for what would have been, I guess, my rent. So I'm living for free now. It also had enough extra income to cover my car. I had a Ram 1500 at the time. So it was about $500 a month that I had to pay for that car. And then it also paid for my cell phone. My cell phone, I was like, Verizon, top plans. And I don't know what I was doing, but it was like $200 a month. So it covered all of those things. And now I'm like, dude, I'm financially free.
What
I'm out of the
cash
rat
flow was
race.
that, Alex? So how much was it above the mortgage? That's it, paying the mortgage was
Oh
like a couple
man.
thousand
So
dollars or
yeah, I mean, I bought it.
two,
This
three
is
thousand
this is
dollar
this
cash
is
flow.
right. Yeah. So this is right around 2007, 2008 time. And the market was crazy and everybody was losing their shirts. And I bought this triplex for $220,000.
Mhm.
Each unit rented for over 1,800. Right. So it covered all the expenses. I mean, if we can find that today, that would be amazing, but good luck finding that anywhere. So the other thing I want to say to that is I say this a lot, but there are a couple times in our lives, market, psycholocation, Newark, New Jersey, where the market itself is giving you an opportunity to really change your
So
financial
Alex,
life.
so
Yeah.
the location was New York, New Jersey for that
Newark,
trip?
New Jersey.
Okay,
Yeah.
cool. Okay.
Yeah. So that time, I got in. I accidentally got into that market. I got in at that time. And within 3 years, that property was worth $660,000 from 220 to 660. And I had leveraged it and I went and opened up 2 restaurants with the money. Of course, no mentors again. I didn't know about mentors. I didn't know about masterminds. If there was a mentor for opening up restaurants and a mastermind around doing restaurants, I would have probably saved myself $1 million.
Hold on,
But I
just a
didn't.
second. So that was in 07. You purchased it in 07, actually.
07, 08. Yeah, around that time where everybody else was really scared and lost all their stuff.
Okay.
Yeah. So yeah, and I lost it all. I lost the house, I lost the restaurants because I ran it to the ground. I didn't know how to run a restaurant. It was very successful. The restaurant did both of them, they did like $1 million a year. But nobody taught me how to run it. By year 3, I was so deep in debt with the vendors that every day that I was operating, first of all, I was operating really skinny. I couldn't purchase the things we needed for the restaurant. So it was always like, one step behind. And I was just going deeper and deeper into the hole. So I had to give it up. At some point, I had to give it up. I was so deep in debt, sold the house, and lost all of it. And then I moved down to Florida. I had nothing. There's a picture that I share sometimes of me and my dog in the U-Haul where, I took a picture. I'm like, here I go, new life, going down to Florida. My credit score was like a 400. I was in debt, like very largely in debt. And I moved down to Florida. I moved into a 190 square foot like utility room. And I say this a lot, like my bed was a Murphy bed. It came down and like the dishwasher didn't open at the same time because the bed needed the space. That's how little of a space I was living in. And it wasn't until, I went to another conference for real estate, taught me about the power of partnership. I didn't need money, right? I didn't have money. I didn't have the credit. I remember I had to cancel my Verizon plan and somebody had to sign me onto their family T-Mobile plan. So now my bill was $75 a month. Like that was the place I was in. It was like 6 years ago, maybe not even 6 years ago. I think I took the picture and I looked at the date. It was actually August 2018, which means like 5 years ago, 4.5. And I went to this conference. And again, it's the same story over and over. Went to a conference, got some information, changed my mind, was surrounded by people that were doing it. I was like, oh, wait, so I can get a partner who brings the money, signs onto the loan, and I can run it and we can be 50-50 partners. I didn't know that was a possibility for me. Once I took that and I had one success, because I knew I could do real estate. I have a knack and I had a sense for good properties. One person believed in me, invested in me. And from that point on, Like within very quickly, 2.5 years, there was probably 12 partnerships that I created. I was making $20,000 a month, through partnerships. And that's when I really embraced team. And I think for anybody out there that's watching this, like, you don't have to do anything alone. Like, partnerships is the answer to probably all of your problems. Yeah. So I came back strong that way. And now I'm in multifamily, and I'm strictly only doing multifamily deals that involve many partners. And we put money together, we syndicate the money, and we buy a deal. I run it, my team and I run the deal, and we take a cut from it. And then we make money for our investors passively. Yeah, so that's like kind of like, I don't know if it was a short version of my journey, but I think it is short because of all the lessons and all the hardship I did have to go through and the things I had to overcome. But it wasn't a very long time, which is what I'm so like passionate about, compressing time for people. There's definitely people out there watching this, or that are scared right now, not sure what to do. Maybe you have a W-2 job that you don't feel called to be at anymore. So yeah, I mean, that's and masterminds and people around you to help you get past that barrier. You don't have to do it alone. Somebody can hold your hand through the whole thing.
So which markets are you guys focusing on?
Yeah, so I love, because of my thing about community and what inspires community. Art inspires community, sports inspire community. There's a lot of things that inspire community, but art is something that I'm very passionate about. So when I see a market that is gentrifying or coming back through art, like, that is where I want to be. And we all know places in different areas of the country that was very rundown, and then they brought art to beautify the area. Artists come into the area, then boutique, then cool little bars and little stores and restaurants start popping up, and all of a sudden that area now becomes a place that is not affordable anymore, right? Like, the real estate just go insanely high. Like, if you think about Wynwood, if you think about even Newark, New Jersey, Lake Worth, like, they all use art to kind of come back. So I'm focused on, I really like those types of markets. So right now where I'm focused is in Las Vegas, in the downtown Fremont area. If people don't know, it's like old Las Vegas, where if you see in the movies, all the old movies, that's where things took place. A lot of great, cool boutique motels that now are just run down. And so art is a way that is coming back. So that's where I'm focused. And then I'm also focused in Florida. We love Florida. I think everybody's going to end up going to Florida to retire. So north of West Palm Beach all the way up to Orlando, that's where I like to be too. One of my investment strategies is actually wherever everybody goes, I don't want to be there. When people are like, oh, nobody wants to go there, then I'm like, ooh, I'm kind of interested about that market. Nobody's buying there. Okay, cool. Tell me more about that. I don't want to really hear about Miami. I don't want to hear about Fort Lauderdale, Tampa, Houston, Austin, Dallas. Like, I'm sure those real estate deals are great and people are making money, but every single person and their mother is there. I don't really want to be there. So that's kind of just my strategy.
Right. Yeah. So that's a great idea. Now, in terms of what for the neighborhood side, right? Like, how would you go about picking neighborhoods when you're in multifamily? Usually it's easy to do when you're doing like small, single family houses or condos and things like that. It's a little more challenging to pick neighborhoods when you have apartment buildings, just because they are wherever they pop up, like, you just have a deal in this place, and usually it's a broader market one focuses on, and it's a little hard to pinpoint a neighborhood. So how is that working for you, let's say, in Vegas?
Yeah. So when it comes to multifamily, when it comes to apartments and anything that's bigger than, let's say, 8 units, the bank starts to look at not the location really of the deal. They really look at how much NOI, or how much is the income of the property, right? Like, after all the expenses. And they're like, okay, we'll give you an evaluation based on that. So if you can go into a property, you can lower the expenses or increase the income or both, then you're going to have a higher valuation. Now that's all great if interest rates and cap rates kind of stay the same, right? So if it's kind of going flat, then yeah, you put in some work, you increase the income, boom, now your property's worth a little bit more. But if interest rates going up, like what we're doing now, and what we're seeing is people going in 6-8 months ago, and they had the plan of renovating or doing some sort of value add to the property to increase the value. They increased it. Now, if the interest rates were the same, yes, they would have exit great. They would have higher valuation. But because interest rates is higher, the cap rates are higher, and now the work that they did and they thought they were going to capture that appreciation no longer is there. So that's the fundamental way of buying apartments and commercial deals. Now, I like that. We will underwrite with those same strategies, and that's how the banks are going to look at it. But I also really want to know the neighborhood upside. And this is why I picked that Fremont area. When a neighborhood has really great upside, even though interest rates may be going up and it may be, something that we don't really know where it's going, it will still have a cap rate compression because of the demand of the place, because of how, it was $950 a month for rent, but it's really pushing to 13, 14, 1500. It's going to compress that cap rate. So I also want the market working for me. Right. So that's what determines, I want those areas where, yes, the fundamental math is there and the banks are underwriting it a certain way. I'm like, yes, I like that. I like that it pencils out. I wanted the cash flow, and one of my criteria is I want to go into a property, and if I buy it as is right now, it needs to cash flow. Okay. If I really believe in the property, if it cash flows 2%, I'm happy in today's market because it's very high interest rates, That means when the interest rates come down, I'm going to capture that difference too. Instead of the opposite, like interest rates are low, I buy it, interest rates go up, I lose that appreciation. So it's a reverse right now.
Right. And one thing I wanted to add to your comment on interest rates, and yeah, definitely it's good to be on the right side of appreciation if you're having, other forces perhaps having the opposite effect. But in terms of, I just want to say that in Vegas and and other Western markets where interest rates were increasing, while we still had that enormous rent growth, cap rates were not compressing. So I just wanted to add kind of to that. It's cap rates kind of are also a function of rent growth, just kind of putting it there. But now that it reversed, to your point, now it's suddenly, okay, interest rates now have a huge row. And it's actually seeing cap rates are not expanding. I mean, now we're actually seeing cap rates expanding because, okay, now we got the rent growth situation. And then, yeah, so already in the other direction. And, suddenly everybody's really, really attentive to that in a way. So I just wanted to kind of like at that point, like for me, because it was interesting also for me to see like at the time in 2021, let's say 2022, we weren't seeing like interest rates were increasing, but we were not seeing cap rates expanding. It's not always, they generally expand, but it's not always. They could also stay the same, and it's not a one-to-one thing. But exactly. But now that the rent growth already reversed, it became a very, very real thing. So yeah.
Yeah, and I'll share this too. I mean, this also, if we circle back, this comes to being in proximity with people that are in rooms that I'm not in. Right. So guys like Grant Cardone, they're not in the same room as me. They're hearing different type of information. So being around those people, being around someone like Grant Cardone, all of a sudden, boom, I'm getting this like information before everybody else gets it. And the point is not like right now, like cap rates, usually they're not expanding right now, and they are, but they're not really doing it as fast as the interest rates, is because sellers still believe their property value is still certain area, right? But they're bleeding. Okay. The people that had cash flow, they're not cash flowing anymore. People that had, equal cash flow or breaking even are now in the negatives. Banks are asking for more money, right? There's a lot of people going back out to try to save their property by doing what they call cash call. They go back to their investors and they need more money to buy cap rates, to buy rate caps, to buy these types of things in order to save the property. But I promise you in another 6, 8 months, 12 months, like people are going to be tired of bleeding and they're going to want to just get out just to save their face, right? Because the worst thing you can do as a operator or a syndicator is to not only go back to your investors to ask for money, but then losing their money on top of it. So they may have to get out. And it's not that we want to go out and intentionally club people and get deals like that, but that's the nature of where the market's going to go. There's a lot of loans that were variable coming due this year. I think it was like trillions of dollars of loans coming due. What are they going to do? They're either going to refinance and have to pay money to even make their deal work, or they're going to have to just sell the deal. Right. So that's what's also coming. And it will, I promise you, it will. Well, I don't promise you, but it will push the cap rates up. It's going to follow the interest rates. It has to, especially if their loan is coming due. They're running out of time and money.
Oh yeah, I mean, I think the general expectation for cap rates, multifamily cap rates to expand, I think it's definitely there in some of the markets you mentioned, right? And so, but in terms of, so what has been your one example for you when you started, you joined that mastermind in terms of, like you mentioned, like let's say Grant Cardone and like these like bigger, like more experienced real estate investors or syndicators and so forth. So like, what was your one experience where it actually a relationship brought you forward, let's say, as far as like partnering on a deal, knowing this more experienced person who kind of helped you advance your career, let's say?
Yeah, I mean, so this is what it looks like. I mean, I joined the mastermind, didn't know what I was doing. I didn't have the network, and I meet one person. This one person's done deals before. If I go into my first deal and I had somebody hand holding me, showing me what the LOI document looks like, how to write it, how to submit it, then signing a PSA, all the process along the way, if somebody could just give me that as I'm walking through it, it gives me tremendous confidence. Right. It gives me so much confidence because somebody's walking me through it, talking to the loan officers, the due diligence process that they know. And it gives me that confidence. I don't have to fail and make a mistake because of my lack of knowledge. I have somebody with me. Like that in itself is so valuable, being a part of a mastermind. So for me now, it's like, how do I pay it forward? I got the same thing. I got all these deals. All my documents are in the Google Doc. Anybody that is in our community has access to like how we're going through the process. So it's going to give them confidence. I have people that are, that I've done broker calls with. I'm calling brokers with them. So they learn along the way. And they literally understand all the deals that I've done like it's their own deal. So now it's the leveraging of the we, like we've done it, right? The mastermind, we've done it. When I first started, Grant Cardone's real estate club. I used to tell brokers, I'm part of Grant's exclusive platinum mastermind. Dude, it's called a real estate club, but I'm like, exclusive platinum mastermind. And you just drop the name. Like you can leverage everything. This is what's great about masterminds. You get to leverage it. And then the information that I have now, like the confidence of being patient, is also because I'm in those rooms and hearing what the big players are doing. Okay, well, if they're doing it, they definitely know something. But if I wasn't in those rooms, how am I supposed to know that? I may get myself into trouble if I didn't have that information, right? Because I may not be patient enough. I may not be able to see just a little bit further down the road. And they give me that sight, that foresight, like, here, this is in the information that you may not know. This is what Blackstone is doing. Oh, okay. Well, if Blackstone's doing that, it trickles down, down the chain. I don't want to be the last person in the chain, right? But I want to be up there somewhere. I want to be in the know. So these masterminds not only give you the relationships to meet, the opportunity to meet somebody that will change your life, but the information every day. Every day, it's like golden nugget, golden nugget, golden nugget. And I apply those things to our deals. And that's what makes it so valuable for me. And that's why I spent so much money last year joining so many different masterminds, because I want to be in those rooms. Yeah. I want to know who's succeeding and what are their secrets.
About Alex, like what about, are you doing also, it's kind of like this webinar podcast, this kind of community building that is more, I guess the podcast niche of within the real estate industry, as we know, it's like quite substantial, right? There's so many different podcasts and so forth. So like, is that something that you have done or experienced with, and what was your experience with it?
Yeah, so I mean, I've been running like a call. I've been running 2 free calls a week, and then I have my own mentorship, my own mastermind group. And, I pay for all the information. I pay for the experience I have. Now I pay it forward. I pay it forward because what I'm actually doing is I'm calling people that are my team. Who resonates with me? Who's ready to go the distance with me? I don't have to serve everybody, but if I don't make the call, then nobody's going to answer. Right. So I make the call every week, every call that I'm on, I'm calling forth partners. Who resonates with me? Who wants to play with me? Because as more people join my team, my confidence of taking down bigger and bigger deals grow. And that's the point, you know, and we go and we help other people do it. And I believe in creating win-wins all the time. And if I can just, if I really believe in the philosophy of win-win, that every time you win, I win, then I can cut that formula in half. Now it's just you win, right? As long as I can help you win, that's all I need to know. I don't even need the win-win anymore. It's just you win. I cut that formula in half. And so that's the way I kind of just every morning I think about, all right, this person, they're struggling with this. How do I help them win in my group? I don't need to go and change the world and save the world in that way. I don't need everybody to join my group or be on my calls. But the people that are answering the call and the people that want to be a part of it, yeah, I'm here to make an impact in one person's life, in 2, in 50. I don't know, whoever. So yeah, that's why I do these things. That's why I have social media that's constantly, you know, sharing videos, sharing about myself, what I'm about, because this is the call. Who's going to answer it? All right.
That's great. Oh, that's awesome. Yeah, that's
Thank
awesome.
you, yeah.
Contributing even one life, right? would be great in a meaningful way. So a question on the chat. So can you give details of a deal that you bought in Fremont?
Yeah, so we're in contract right now in a deal. It's a 30 unit deal. I can't give too much information about it. It's a 506B. So when I say 506B,
Sure.
it means I cannot publicly promote it. But yes, we do have a deal under contract. We have about 6 more that we are underwriting and looking to, you know, submit our LOIs into. Yeah, we do everything from already stabilized properties to building. We'll build them. We'll renovate them. And I have the confidence to do that because I have teammates that have these expertise.
Mhm.
If it was just me by myself, I'd be like, I don't know anything about electrical. I don't know anything about building. I don't know anything about flooring, right? I don't know anything about these things. I have no confidence to do it. But because I got them in my back pocket, if a deal shows up like that, I'm in. I can find the profit in there. I believe in the area.
Mhm.
Yeah.
So on your side, like, you know, in multifamily, usually people kind of choose and they focus either on the deal, maybe on the deal, or they focus on capital raising, or rarer, sometimes, let's say, focus on asset management. So what would you say is your strength?
My strength?
Focus on that. Yeah.
My strength is simply telling stories. I tell stories. I share a vision.
Mhm.
You know, I don't even need the money. I don't need I don't need anything. I just have a vision.
Yeah.
This is what I need, though. I need somebody to sign on to the loan. I need somebody to bring the money. I need somebody to run the deal because I'm going to do 10 deals. So I'm not going to be running one deal. So who are these people? Right? Who's going to do my investor relations? Because I don't want to be writing up newsletter and sending it out every week. You know, who's going to be taking care of the bookkeeping? Who's going to manage the management company? That's my important thing is about time. So I tell stories, you know, and I think that's my superpower. I used to think it was capital raising and investor relations. Yes, I'm strong in those aspects too. And I know where my weak spots are. I think that's another one of my strengths is that I know where my weak spot is. You know, I
Mhm.
think it's people are afraid to look stupid or look dumb because, oh my God, that's a weak spot. Great. You want to find those things as fast as possible. Yeah.
So sounds like maybe starting with capital raising before and kind of being able to really put projects and teams together now, like with your community and so forth, and really putting all the different pieces together.
Yeah.
Mhm.
Yeah, I think
Okay.
just, you know, with more people behind me, I'm less and less afraid of how much money I can raise. And, you know, those pieces are just kind of putting into place by themselves as I share my vision, my story, and people are answering the call and people want to be a part of this movement that is being created. Right. And Yeah, that's my thing, is sharing and giving and telling stories. That's my
Mhm.
strength.
That's great. I mean, I think, yeah, it's like, I think soft skills are, I mean, they've always been the most important thing in a way, right? And they are very important, let's say. But now they're getting like more and more. I mean, you have like, I mean, I don't want to kind of use catchphrases like Chat GPT or whatever, but you know, that stuff like essentially all that automation, you know, like kind of reducing the you know, the importance of hard skills, you know, versus soft skills. That's the truth. So, you know, soft skills are going to be more and more important, I think, in the future. So, you know, being able to put people together and so forth, it's the most important thing, perhaps. So let's open up the floor for, you know, if, you know, let's see if maybe others had any questions, because I went over some questions myself. And do you guys want to ask Alex? He's been like very, very generous with his with answering all my questions so far. So,
Yeah, thank you.
maybe people are feeling kind of shy. So,
Well, somebody's got their hand up. Joe's got
oh
his
yeah,
hand
they
up.
do. Okay, okay. Let me see. Oh yeah, never mind. Yeah, Joe, go ahead.
Hey, how are you guys?
What's up?
I have a question for Alex. Alex, where do you see yourself in 10 years from now?
10 years from now? 10 years from now, I'm definitely spending a lot more time with my wife, spending time with our kids that aren't here yet, but they will be. And you know, massively influencing people's lives through social media, through conferences, you know, speaking on stage, and you know, having successful podcasts, just something that a platform that is really, really successful in being able to tell my story and bring people together. And obviously, like real estate on the side, I'm going to see myself continue to grow. There's going to be thousands of units that we're going to be taking down in that time. 10 years, 10 years is a long time, because I hear so many stories of people's short time in real estate and how far they've come. You know, people have grown $700 million portfolios, 1.5 billion, this guy that I just met, in 10 years. So, you know, I feel like if I even say those numbers, I might be limiting myself. So I guess just in my ability to impact people would be where I just want to make sure I stay the course in that.
Got it. Thank you.
But that, yeah, that's I mean, that sounds, it's a great aspiration, right? I mean, you've already been doing it, impacting people, and then for the future, it's definitely, if one wants, like, okay, if I have my own finances in order and everything is perfect, you know, I'd rather just kind of impact the world, right, and change the world type of mindset, right? It makes a lot of sense. And
yeah, that's something I say all the time, is like, I want my kids not to think about money. Like our goals, every time we think about our goals, we're like 2023 goals. Yeah, I want to make X amount of dollars. I want to do, you know, everything's attached to money. But what happens if money is not even on this in the subject? Like I want my kids to be making declarations on the year on something much bigger than that. You know, what would be a goal that you would go after if money was not even an issue? If you were just like, oh, look, this is a nice property, I'm gonna buy it. Oh, this is a nice car, I like it, let me buy it. Right. So if that's not even an issue, it might be like, all right, I want to have a great relationship with my wife. I want to have an awesome relationship with my brother, my sister, my mother, my father. All right. So those becomes the goals. Maybe it's, I want to make sure that nobody in the world is don't have access to clean water. You know, nobody's starving in the world. I mean, I want to see people having that type of goals. And I think that how that's going to happen is, it's got to be, you know, we got to break free from the money game. Got to bust loose from the money game. Great book.
Yep.
Yeah.
So went to school in New Jersey, right?
Yeah.
And like, you grew up in New Jersey as
Good
well?
old Newark, New Jersey. Yeah.
Yep. You grew up also in New York, or
I grew up in New Jersey.
New Jersey? Okay, okay, fine, yeah. And so, how many years ago you moved to Vegas? Like just the past couple of
Vegas,
years?
yeah, last year and a half. I lived in
Okay,
Peru
okay.
before that, Florida before that, and you know, Florida and Peru were like my soul search days. You know, really trying to find what my purpose is, what I'm doing. Mm-hmm. And now it's about stepping into it and integrating all of that, applying what I've learned.
Right. And okay, so we got Jessica has a question. Go ahead.
Oh, good afternoon. No, not so much of a question, more of a testimonial. Obviously, I'm part of Alex's legacy group, Legends, and I've known him before he started his mastermind. And I just want to give testimony that this man he's all that and a bag of chips. Everything that he says, he's been actually quite humble about his passion to build community and to teach and to share all his knowledge, as including the hundreds of thousands of dollars that he's spent on his seminars. He makes himself available to us, and we feel comfortable, being able to socialize with him and approach him and ask all our questions. And he never says no. He's always trying to think. He's a visionary beyond his young years. He's a visionary, and he's always looking for like the win. Like I said, not even the win-win. He's always trying to find different ways for us winning. You never really hear him talking about him. He's always talking about how he can help us win and bring more people into this community. So it's the lessons that I've learned and that I'm learning in this mastermind are not only valuable for my multifamily business, but I'm an electrical contractor, but in my own business, I find there's a lot of teachings that apply to all businesses, and I am very grateful to be a part of this community.
Yeah,
That's
thank
great.
you, Jessica.
Thank you as well. And I think Scott has a question. Go ahead.
Hey, so yeah, my question, you mentioned about a few minutes about social media, and that's something I'm really interested in myself too. I've been trying to grow in social media for a long time, and it's painful. And so I just was wondering if you have any tips. I noticed like you've got a big following on Instagram, 70,000 followers. According to Social Blade, almost all of those came in the past like 2 months. And so I'm just wondering if you have any tips as to how to grow a social media following, especially one that's like that explosive, because it's tough, like chasing the algorithms and everything and putting out quality content. So I just want to see if you have any advice.
Yeah. So, I mean, most of this came in the last year, really, so like I was at maybe like April or March last year, kind of like in the same boat as you. 600 followers, multiple times try to start up doing my social media, and then it's just the returns were not great because I spent so much time filming the video, editing it, putting the caption, putting it on there, 3 hours of my time, and the video is relevant for 15 minutes, right? And then it just kind of dies. And when people look at my page, they're just like, oh, this is not very consistent. All right. So the tip that I would say is you got to figure out now how you're going to outsource that, how you're going to outsource it so you can have time, right? I'll go and film a whole bunch of stuff, and then I put it in a Google Drive, and that's the last thing I see of it, right? Somebody else is editing the video, putting the captions on, putting the tags, putting all that, and then even posting it for me. Now that's sustainable for me. Yes. Did it require money to start? Did I have to be like, all right, I'm investing into my brand? Because investing into your brand is something that has infinite returns. You may not see it right now, but that has turned into, I don't even know how much in people joining my Monday night calls and $1.2 million in investments into my deals and just so much stuff. And I'll pay to shorten my time frame. And I'll tell you one quick funny story is, I mentor teens a lot too. And I was like, okay, this one teen just really wanted to be successful in YouTube. I didn't have anything on YouTube because I just have everything on Instagram, putting some reels on there. I'm not paying any attention to it. I'm like, all right, you have 200 more subscribers than me. I was at like 110 and he was like 310. And I was like, let's have a race to 1,000 subscribers. And he's like, yeah, he got real focused, started making all these videos, interviewing. He's like, dude, I got this awesome video of Grant Cardone. It's going to be great. Yeah. It had like 7,000 views, gave him another 200 subscribers. I'm like, okay, cool. I just got my things going that I post on there. And then I go and I pay for hardcore ads. Like I put my channel in front of a lot of people's faces, and I got to 1,000 in like 3 days. And he's like, dude, how did you get there? So I wanted to teach him a really important lesson. Money is the shortcut, Right now, my YouTube channel can be monetized. He's still waiting. He's still at 500. Like, what is the opportunity lost of waiting that long to get to a certain point? Because now I have other opportunities that open. And I wasn't, if it wasn't even for this competition with him, I probably would not have paid attention to it. Right? Because I'm focused on Instagram. I'm going to let my Instagram following grow, my LinkedIn, grow my YouTube. So I will also say focus really on 1 or 2 channels that supports your business and what you're doing. Maybe it's LinkedIn. Maybe it's focused on LinkedIn. My friend Hala runs one of the best LinkedIn master classes. You know, she is, if you look her up, Hala Taha. She on Instagram, she is Yap with Hala, and top tier Instagram person. Okay, people pay her $12,000 a month to manage their Instagram. So take courses for shortcuts too. You know, because she got there. If you want to get to where she is, get the blueprint. And that's what I would say. Like, don't be afraid to like be like, all right, I'm going to set aside $2,000 a month to really get serious with my brand. I'm going to give myself 1 whole year. And what I'm going to do is I'm going to have somebody edit all my videos, 1 post a day. Okay, they're going to do all of it. Who's going to do that for me? I'll film all the content. Every Monday, I will film 7, 8, 12 different videos, and I'm going to put it out there, and they're going to take care of all of it. That's sustainable. You trying to do it yourself? No, but it's not sustainable. Unless you got all the time in the world and you don't do anything else besides your Instagram, it's not. All right. So yeah. So now I spend probably $7,500 to $8,500 a month on my social media. It didn't get there overnight. It was a constant like coming over my limiting belief about spending money and paying first. Right. And then what's the returns? I can't even calculate it because it's there forever now. You know?
But when you say hardcore Instagram ads, like what are those? Now we're all familiar with, let's say, Facebook ads, even like YouTube ads, and so forth.
It's the same thing. You put ads out and you push your videos. There's video boosts, right? That means they're gonna show your videos more.
Video boosts on Instagram.
Video boosts on Instagrams. There is also people that help you with other things. See, like what I offer is can support anybody in the world. I don't need to niche it down. That means, how do I reach out to other audiences? How do I work with other people? There's accounts, there's every day somebody that has 2 million followers messages me and says, hey, they can help me with this, help me with that. Have I spent money with people that, you know, return nothing? Yeah. Have I lost some money? Yeah. I'm probably losing money right now on the investment that I made on trying to get the check mark. Right. So it's just like you have to. But see, this is also part of it. If I was to start a mastermind, or if you were in my mastermind, I give you the blueprint to the things that work versus the ones that don't. How much time and money and heartache and energy does that save you? All right, so you got to think about that all the time. This keeps coming back to mentorship, masterminds, things like that.
How many videos do you put out there? Like 1 per day, or?
Yeah, at least 1 a day, at least. You know, we have our files right now is probably I have like 2 months worth of videos.
Right.
Because I have multiple teams breaking down videos. When I go speak, that 1 video turns into 10 videos. When I do one of these types of calls, or when I do my own Zoom call, that video turns into 10 calls. And we just, whatever they feel like putting on, they will just put on. Things that are relevant to what I'm doing now, they'll put on. Right? Like if I have a conference or something coming up, or, you know, something I'm doing, then they'll put those videos up. And you always, and when you do videos, think about this. What's the hook? Like you're going to get somebody to be hooked into it. Hey, this is why you're not making money this year. Oh, okay. Well, let me continue watching this video. And then you do a little story, and then you have a call to action. Call to action could be, you know, follow me, like this video, comment on this video, DM me, you know, something. And now you're creating a community inside your social media. Like you'll see all of my videos at the end. It's like every Monday night, free mastermind, 7 p.m. Link is in the bio, sign up. Or DM me the word mentorship, DM me the word invest. All right, these are little clues of hooks. I mean, of call to actions. You always want to leave with a call to action. Don't make a video without a call to action. Yeah. Somebody had to teach me that too, right? I fell on my face a whole bunch of times before.
Right. So we're pretty much kind of at our time now. So let's say, what is maybe a last thing you want to share with our audience, and the best way to reach you as well?
Yeah, I think the best way to reach me obviously is through my Instagram, Alex Love Lee, and you can find me there. All the information of the things I do is in the little link tree in my bio. Right, DM me, friend me, and follow me, and if you DM me, it's a good chance for me to engage with you. Right, it might not happen right away because I get a lot of DMs, but the people that are persistent, I end up having a relationship and a conversation with. Like since we're on the topic of social media, I'll just leave it off with this. Like, really just be very persistent and be very consistent and persistent. Yeah,
that's great. Well, yeah, thanks, Alex. So that was a ton of value for everyone.
Thank you.
So I appreciate that. And so yeah, so thanks to everyone also for joining here today, and have a nice evening. Thanks, guys.
Yeah, thanks so much. See ya.